How does Donald Trump pay zero taxes?
President Trump, who's a billionaire, paid no income tax at all in 10 of the previous 15 years.
Tesla made over $2 billion of profit. You know how much of taxes they paid? Zero federal taxes.
Guys, what you're about to hear today is a brutal reality check for every honest taxpayer. I sat down with a man who spent his entire life studying how tax systems actually work. Meet Divakar Vijayasarathy, author and global tax strategist advising some of the world's top billionaires on how to legally pay zero tax. So if you've ever felt cheated by the system, if you've ever wondered why the rich seem to play a different game, this conversation will change how you see taxes forever. What are the hidden steps that these billionaires use to save taxes?
America, for example, its religion is capitalism. Its deity is the dollar. Reinvestment is a ritual.
If I'm a D2C founder, how do I look for the policies that can give me maximum benefit?
You actually solve for a government's fear or dream.
We plan to establish gigawatt-scale AI-ready data centers in Jamnagar.
And anyone who solves for this will be insanely rewarded.
What exactly is the difference between India's tax policy and Dubai's tax policy? And can we really save taxes by moving to Dubai?
What is a pain you will have to endure to live and work in Dubai? I used to pay tolls for dropping my kids to school in Dubai. Dubai is by no means a tax-free market.
Is there a way to pay zero taxes in India?
100%. I've got a framework, what I call.
Hi Divakar, welcome to the Indian Business Podcast. Divakar, I was reading your book and I couldn't help myself but be extremely curious to understand how to save taxes. You know, I was just reading the news the other day and it said that Donald Trump, the billionaire, paid zero taxes. Then I also keep hearing from Instagram posts saying that the wealthy 1% never pay taxes, only you do. So I felt bad for being a common man because if you think about it, today we pay anywhere between 25 to 40% in taxes. And it feels like we're being looted of our hard-earned money. But then I read your book, Don't Just Pay Taxes, where the just was so small that it almost looked like the book said, don't pay taxes. So today in this episode, Divakar, I want to know from you, number one, as a business, how do we save taxes the right way? The right way being the most important word of all. What are the most legitimate methods to save taxes right here in India? And what are the hidden steps that these successful founders and billionaires use to save taxes? That is the agenda for today's podcast. So Divakar, tell me, as a common businessman, how can I save taxes in India?
So let's get to understand why taxes, right? Now, there was a phase in my own life when I ended up facing 70% tax cost. That moment triggered a question in me as to why is it a system, that day I lost faith in the system for levying 70% tax on me. So I traveled across the world just to understand why taxes exist. I read insane whatever, met bureaucrats, policymakers, entrepreneurs, tax experts. I just couldn't get an answer. But it was one Sunday morning when I was reading the history of ancient empires. I came across this levy called jizya. It was a tax levied on non-believers of the faith. However, if the non-believer sent a member from his family to the military, the tax was waived. That's when you realize jizya was not to collect money. It's to promote a behavior.
To build an army.
To build an army. They wanted people to join the military and they put jizya as a decoy for people to come and join the army. And that perspective opened up my mind saying tax is not for collection. It's not levy, it's language. And once you understand how to read that language, the patterns became so clear. Country after country, its priorities were automatically there. And which is why when I got this perspective, the why of taxes became so clear. Because normally you are trained to believe that tax is for resource mobilization or redistribution of income. I mean, you see, right? The rich get richer, the poor get poor, money has to. But the largest purpose of tax, at least of enlightened societies, is to align public behavior. When it comes to alignment of public behavior, there are three buckets, the three P's as I call it. It's priority, paranoia, and prohibition. Now let's take the first one, priority. right? If you do what is important for the government, what's the government's priority? In a country like India, a populous country, jobs is a matter of priority, right? So if you provide jobs, there is an incentive which will be available to you. You don't even need to look at the tax code. You can just say from the state of a society. But this is not as exciting as the next one, which is paranoia. Paranoia, right? The real opportunity is in paranoia. When you solve for a government's fear or dream, you get rewarded. Classic example, semiconductors, AI. In a country like, now today America wants to be self-sufficient as far as production, so manufacturing in the US. India, defense imports, we want to substitute imports with domestic products. You will have, without even looking at the tax code, you can always say there will be an insane incentive waiting for you. And the last is fairly ironic, prohibition.
Cigarettes.
Exactly. Liquor, right? These are stigmatized by the society, but government will have a propaganda machine against it, but will keep on increasing the tax rate, but will also be protecting that industry. Because these are the biggest contributors to the exchequer.
Let's go deeper into this. Can you give me an example of a client who actually saved money or earned from taxes by solving for the government's priority?
This is a situation I so vividly remember. It happened in early 2010s. This gentleman, let's call him Mike, from the Silicon Valley, he was running a tech services business. And this man was looking at offshoring work either to India or Philippines. So he came to us saying, give us an estimate on which country would cost me less in terms of labor, infra, all those things. So we said, Mike, you're solving for two problems of the country. First, you're giving them jobs. This is a matter of priority for both the countries. Both are developing, both have large populations. Second, you're making foreign exchange, you're giving them foreign exchange to the country, which is a matter of paranoia for them. Now, you are solving for two critical problems. The question is not which is going to cost you less, it's about where I can earn the most. When we reframe the question, in India at that time, we had the STPA regulations at its peak, right? So,
what is the STPA regulation?
Software Technology Park. Almost all the large IT companies of today, Infosys, TCS, Wipro, they grew on the basis of the benefits because we were literally the government wanted to promote. That's a classic case of alignment. Infosys paid less taxes or got massive rebates, not because they evaded law or found loopholes. They aligned with what the system wanted. They were solving for a paranoia of the government. They were giving them jobs to younger population. They were making foreign exchange, which this country so desperately required at that time. When we did this for Mark, for our client, we just spun the question to see where he could make the most rather than which could cost him the least. He ended up choosing India, and literally it became a negative cost game because he did not have to pay tax. He could import all his high-end servers, etc., from different parts of the world without duties. This facility was in a software technology park, subsidized rent, accelerated deductions for job credits. What more could someone ask for? So it is not about what you do, it is about how you position what you do. And then you actually, at the end of the day, need to ask. Even a baby has to cry to be fed. Doing business in a country, claiming what is rightfully yours, is not a matter of fear or you. And any entrepreneur should never shy away from what the government wants him to claim, for the simple reason that when you claim the incentives, what you're legitimately due, your profits become a shared success. You become part of the government's success story, and that's far more powerful. You have the entire bureaucracy wooing for you. That's a mindset shift which an entrepreneur needs to embrace, if that makes sense.
Divakar, do you think, now from the example that you just gave me, it almost looks like the Adanis are now solving for both priority and paranoia.
Yes.
Is that correct?
Absolutely.
Can you help me understand this principle in the context of Adani's?
If you look at Adani Group companies, they end up paying anywhere between 9 to 12% or 13% taxes in a country which taxes at 25 or 35%. Now, of course, there are banners say he doesn't pay tax or what. Let's understand what is he actually solving for. He is solving for infrastructure, which is by far one of the biggest paranoias of a developing nation. He is solving for renewable energy. It's a commitment which this government is given, which this nation is given to the world, that we would effectively end up being carbon neutral in the coming decades. Someone has to solve for this, right? Let's go back, Ganesh, if I were to zoom out on this, on how governments view citizens, right? They view citizens, especially entrepreneurs. I have this framework called BETS,
Can you spell it out?
BETS. Builders, enablers, thrivers, and supported. So builders are those who actually contribute to the society. They build and solve for dreams and fears of the nation. In the case, if we were to take Adani's case, Adani is a builder. He builds port infrastructure. So he would be getting all the rewards possible because he is solving for a desperate need of a nation. It is not only India and Adani. Elon Musk in 2024, Tesla made over $2 billion of profit. You know how much of taxes they paid?
How much?
Zero. Zero federal taxes. 2024, over $2 billion of profit. He didn't evade law. He solved for a problem which America so desperately needed. Oil, renewable energy, clean energy, whatever you call it. Now, that's the game. The game is not about fighting the system. So, positioning yourself as a builder. Then enablers are people who make builders succeed. So, if I'm a labor contractor, I provide people to solve for it. There is a reward which is waiting for. I just need to claim that. But it's not as much as a builder because I don't take the risk, or I'm not a trailblazer like a builder. Then comes the third category, the thrivers. So these are people who are absolutely an integral part of the economy, but they don't create. They consume the infrastructure for which they end up paying tolls, which is why the thrivers are the most taxed lot. So many times I keep getting this question, an employee ends up paying 50% tax in India, whereas a business pays only 25% tax. Absolutely.
Because the business is the builder and the employee is the enabler.
No, the business could be a builder or an enabler, but the employee is a thriver. For you to get a good job, you need to have the economic infrastructure in place, which someone has built it for you, right? We take it as a matter of right, but what does it take to build institutions and make them thriving and legit? It's huge human capital and energy which has gone behind it. And you are now feasting on that system which has been built for you to succeed. That's the price you pay. It's not unfairness. It's actually being fair because you have not built the system, you're feeding on the system.
And who would be supporters?
Supported are the segments of the population which actually require that little bit of ladder to succeed in life. We've got the backward segments of society who require enablement to succeed.
Divakar, I'm able to imagine this in the context of semiconductors, Adani ports, solar industry, and so on and so forth. But these are industries which are reserved only for the selected few because they require a lot of upfront capital.
Yes.
My question to you is, if I'm a D2C founder who wants to take benefit of the government policies, how do I fit myself into this framework? And how do I look for the policies that can give me maximum benefit?
If you're an entrepreneur, you've got only two variables in front of you. You need to make one variable fixed. What I want to do and where I want to do.
What I want to do and where I want to do.
Yes, because in a world of unlimited mobility as far as capital, markets and talent is concerned, the whole world is your level playing field. You could choose, literally spin the world map and do wherever you want to do. And everywhere now, if you're an entrepreneur, you're given a red carpet visa, whichever part of the world. So coming back to the framework, right? What you want to do and where you want to do. You keep one thing fixed. What you want to do is fixed, choose the market which rewards that. You don't need to go too far. Your GPT will give you an indicative answer, then dig deep. But if where you want to do is fixed, that's where what you just asked comes into picture. Get to the economic policy. In income tax, there are provisions where Indian government has given, if I'm not wrong, it's section 3580, where they've given a list of incentives for specific industries which could directly come within your ambit of D2C. And if I'm making honey, classic beekeeping is one of the incentives industries. Position yourself as a D2C enabling that particular segment which the government wants. Because the government has already done its scoping. When you do that, you don't need to think too hard. They have done the product market fit. They know there is a demand. They know there is great supply which is already available. All you need to do is identify and ask.
People, now that you've understood the 3P framework, your obvious question would be, Ganesh, how do I find these gold mine opportunities? Well, you can find these opportunities in 3 types of documents: the budget document, the manifesto, and the consultation paper or the policy paper. For example, if you look at the BJP manifesto, it clearly tells you that the government intends to install 10 million solar panels through the PM-Surya Ghar Muft Bijli Yojana. So obviously, if you're a solar panel manufacturer, you will benefit. If you're a Vari Energy franchisee, you will benefit. In fact, even if you are a solar servicing company like Solar Square, you will benefit. Similarly, if you look at the budget of 2022, the government wants to prohibit the wastage of energy while distributing electricity. So they went very bullish on smart meters with the aim to install 250 million smart meters all across the country. Do you realize 250 million smart meters is a huge addressable market? And my friend Ayush built a company called Kimbal Technologies, which today generates 1,200 crores in revenue. So prohibition could be both about protection and the destruction of an industry that could help you spot an opportunity. So you can optimize and find these business opportunities on the basis of what the government intends to prohibit or protect. And lastly, the government is paranoid about the healthcare system of India. So they are introducing something called the Unified Health Interface. And you can find out everything about UHI through the consultation paper that I've attached in the description. This paper will teach you where to build health tech apps for India, just like Paytm used UPI to become a $1 billion company. I will attach one video and a document each for all 3 points so that you can understand the gravity of what Divakar just taught us in the podcast. And now, back to the episode.
But the question is, Ganesh, today we all look at taxes as a means of collection, right? Let's just go zoom out here. Let's look at the evolution of taxes, right? In ancient days, taxes were typically when people moved from one place to another for trade. There was a lot of dacoity. Safety was a challenge. So kingdoms or tribes had their own security systems. They charged a fee for protection as far as movement was concerned. So tax originally started for protection. Then in the Industrial Revolution era, America is a classic example. They had a huge supply chain set up. They had market which was consuming. So you wouldn't mind paying taxes because it was giving you so it was a price for access. Today, tax is enabling progress. That's where the framework of alignment is more pervasive today than it ever was.
Can you help me understand this? Today, tax is an enabler, you're saying?
Absolutely, an enabler of progress.
How?
Let's take the case of Estonia, right? Estonia is small, it's a tiny nation in Europe. They said we would want to focus on crypto, and they built an entire institution as a society around crypto. Today, they control over 50% of the crypto startups in the world. Why is it possible? It's because they were so intentional about the kind of population they want. They socially engineered. It's not a tax haven by any means. They charge you 20% tax. People don't have a problem paying tax, but they have made sure that if you are setting up a crypto business, you will not be fleeced. You would have clarity on what it takes to succeed in this industry. Now, that's the future, right? The future of nations is not physical boundaries, it's policy magnets. Places which have very clear policies, clear institutions to enable contractual obligations, and frameworks for people to succeed. Those are the nations who use tax as a lever. See, Dubai is not a tax-free classic example, right? I mean, most Indians look at Dubai as the first go-to place. If I want to save tax, okay, fly to Dubai. Now, the question is not about, Dubai is by no means a tax-free market. It's a toll economy. They just shifted the control. Instead of paying a blanket tax on your success, what will you do, Ganesh, if you are successful? If you make more money?
I will go for a ride.
Yes, you will go for a ride.
Consume more food.
You will consume. They just started to tax your behavior. They started to collect toll of all your behavior systems, which you will use if you are successful. Period. You effectively end up paying more. Maybe tax is less, but not cost. Which is why even to drive on roads, you end up paying. You're even in India, you have people say that even in India we have toll road. Toll roads are when you do city to city, not within city to drop. I used to pay tolls for dropping my kids to school in Dubai.
Can you help me understand this better? Because Divakar, I'll tell you a problem. The problem is Indians are so fascinated by headlines.
Correct.
Especially about taxes.
Correct.
Because, and you know, it makes complete sense. Even I am one of those Indians, and I'll tell you why I feel agitated by the concept of taxes. We pay 26% tax, and then we pay tax on our personal income also. But for the money that we pay to the government, we feel that the services that we're getting are absolutely trash. That is the reason why there is a fundamental disagreement between the citizens and the government.
Correct.
And that is the reason why we try to save taxes. When we look at United Arab Emirates in general, we are looking at a country that is providing world-class lifestyle without taxing its citizens. So there is this inherent notion that Dubai is much better than India. In a lot of ways, it is better. But in terms of tax, it's only after I got to Dubai that I understood that they just have a different method of revenue generation.
Exactly.
And in India, it just happens to be tax, which is very evident to the audience. Whereas in Dubai, there are small avenues where you'll have to end up paying money, which collectively, more or less, comes to the same amount of money that you would otherwise pay in India. However, another justification that especially the entrepreneurial community has is at least they've got world-class infrastructure. So there, because people feel like they're getting the value for their money, they don't mind paying taxes. Here, every time you pay tax, you feel like the government is just collecting money just because it can. You're getting my point, right?
I got it. See, Ganesh, there are two things which come to my mind, okay, to answer this. This is a common question when people come and say, I want to relocate my headquarters, I want to relocate my family. There is a framework which I use. It's called the true tax cost framework. So true tax equals tax paid plus pain endured minus odds of success minus incentives.
True tax cost is equal to tax paid plus pain endured minus odds of success minus incentives.
Period. So I'm doing my business in India and you move to Dubai and say, okay, fine, my tax rate is 9%. So I will charge off my expenses there. That's it. That's a standard classic mindset, right? Okay, I'm paying 25% and personal tax is 0. In India, if I want it in my pocket, I'll have to pay dividend tax, all those things. Let's compare the headline tax rate, 25 versus 9%. That's the first comparison you will do. Okay. The second comparison, let's go to the second component of the pain endured. Okay. Yes. What is a pain you will have to endure to live and work in Dubai? And the pain is not only from a personal perspective, it's for the family as well. Because this is a dimension. Tax structuring is not about just paying less money. It's about altering your lifestyle for it. Let's say I have my family and friends in India and I have my residence in Dubai. My kids have to get used to a new school. My wife has to get to a new neighborhood. I'll have to keep traveling back and forth for family and friends here. Eventually, that pain becomes higher, so I would end up diluting my relationship. This is an emotional investment. Pain is not just physical, it's an emotional pain. So put that into context. Let's say my emotional pain in India is 0 because I have my entire cohort here, whereas from there I'll have to keep traveling. So that's going to be put a 20% number to it. That varies again person to person, if I were to put a 20% number to it. Then the next question is about opportunity. Great infrastructure, where is your client? See, we complain about 25% tax because the government is not giving service. Government's job is not only to serve you, but also to give you a market, which this country has done so phenomenally well. I think that's where, if you're an entrepreneur, you need to be thankful for this country to have given you an opportunity. 140, see, let's understand, Ganesh, ruling over 140 different people, speaking in 30 states, 300 languages, 3,000 cultures is crazy. And there is a system which makes all these people follow, adapt, and still thrive. You need to give, just for that one attribute, momentous recognition for any government. So that's the price you pay for getting a market which is $5 trillion in size, growing, 140 crore, majority are young, hungry to consume. Now, that's a call for an entrepreneur based on their business. That's where your odds of success comes into picture.
This is such a beautiful way of putting it, Divakar. I've never thought about true tax this way. Because, when I was sitting with my friends, I only thought about this math 25% and 9%. Exactly. Okay. And then once we started to go deeper and deeper into it, because one of my friends is seriously planning to move to Dubai. Okay. And we were having this 3-hour long discussion. For me, it was very simple. I'm a patriot. So I decided to stay. But there I look like an emotional fool and not like a calculative guy who can actually put forth a logical argument. So now I could be a more logical person and put forth an argument saying that now you have to consider your true tax cost, which is a function of tax paid, pain endured, odds of success minus incentives. And you put it so beautifully when you said that the government is providing you the market.
Exactly. And we take it for granted.
Take it for granted.
See, we don't think that there's a huge cost in just retaining the market. It's like trying to maintain your weight as it is for an extended period. It's so difficult. It's so difficult given all the distractions which are happening. I mean, you see the state of democracies everywhere in the world. We just don't give credit to what a great country we are in. And there is a price you pay because your market and opportunities because of this. And tax is just a way for us to show our gratitude to this nation, just to respect their contribution in making it what it is today.
People, what Divakar just explained forced me to revisit a decision that I've been contemplating for years. UAE is like my second home. I keep visiting UAE every 3 to 6 months. And I met a lot of agents, brokers, and wealth managers who tried to convince me to move all my assets and house to Abu Dhabi. And trust me, on paper, it was very, very lucrative. Every entrepreneur after a certain point thinks about moving because that 26% tax starts hurting. But after Divakar's episode, I went back to my drawing board and put a cost to the emotional pain that I will endure to stay away from my friends and family. And more importantly, I looked at the opportunity cost. While most people look at 26% tax as a penalty, what we take for granted is that 26% tax is the growth fee that the government charges to give you access to 1.4 billion people. And lastly, every time I thought about moving, I realized that I would be trading my seat as a builder in a $5 trillion fast-growing economy for a seat as a driver in the UAE. Therefore, in India, my 26% tax is a growth fee for a market of 1.4 billion people. So long story short, while we all consider our bank accounts, we sometimes ignore the balance sheet of life. So please don't make that mistake. But yes, if your true tax cost is nothing, then UAE is a paradise on earth. Like I said, if I ever chose a home other than India, it would be Abu Dhabi. So my question to you is, if there's somebody who's watching this episode for whom Dubai is the right place, can you tell me, A, who should that person be and what should that person do?
I've got a framework, what I call the world by design. Now, at the highest level, you could bucket countries into 4 types. Of course, the source countries, which are exporters of capital, the destination countries, which are importers of capital, the conduit countries, which enable the movement from source to destination, and of course, you have your tax havens. Source countries, you can typically look at all your developed nations. Now, take US, for example, as a source country. Destination is typically India, Indonesia, all your BRICS countries, developing nations who need capital, who are hungry for capital. Now, you might question, why do you even need a conduit jurisdiction? Conduit jurisdiction by far are small nations. They are homogeneous in their population, small in number, simple in the society. So it's easy to draft rules. So which is why conduit nations have regulations which are easier for monies to move from point A to point B.
Singapore and Dubai.
Singapore, Dubai, Hong Kong, Mauritius, you name it. All these island nations, smaller nations, it's easy because they can bring in simple regulation. But see, in a country like India, which has 3,000 cultures, in a country like US, which has 330 million people, you can't have simple regulations. The IRS is 9,000 pages. It's because the country is so complex. Now, you cannot bring simple regulations for a complex society, which is why conduit nations fulfill a very credible need in the economic cycle. It is not they're bad. See, we should not look at them with the lens of judgment. Once we understand the role they play in the larger economic, it's like, imagine, right? You have your pipe, the water tank is on top of your house. It has to go down, but you'll have these small connectors in between. That's the role which conduits play. Money flows from top to bottom, but it has to go to different floors. So you put these connectors, conduit nations are very similar to that. If I had to put that into context, there are 4 needs of a person: more money, more peace, more opportunity, more mobility. Is what I call what matters most. Rank them. If you want more money, use tax havens. If you want more opportunity, destination countries.
India.
India. If you want more peace, source countries.
US and Germany.
US, Germany, Switzerland, you call it. And then if you want more mobility, use contribute nations. And at any point in time, I would, you rank each of these, because all of us want some of each of these.
Correct.
Right? That's the question, right? So what we end up doing, we end up optimizing for all the 4, effectively optimizing for nothing. The structure becomes a khichdi. Optimize for rank 1.
So now let's come down to 100 crores. I have 100 crores in the bank minus taxes.
Correct.
What do I do with it?
Now, what a person needs to do is a function of what that person actually wants, right? We've got a 5-step process to take a decision. The first step is about having your vision clear. What is your vision? Second step, what are your principles? Step 3, based on your situation, based on your vision and the principles, you will have the choices which fulfill this criteria. List down the choices. Step 4, put your decision frameworks. Decision frameworks are ultimately priorities which matter to you. And step 5, you decide. So this is the journey of deciding what you will do in any tax or wealth circumstance.
So Divakar, now that the first principles are pretty clear, let's try to apply this to a case study. So as a small business making 30 crores in revenue, 10 crores in profits, which requires a lot of reinvestment, how should I go about planning my tax structure?
I've got a very simple framework which we use, which is in any wealth or tax structure, if it is not bulletproof, you are setting yourself for trouble. So what do you mean by bulletproof? It needs to be simple, aligned, and exit efficient. You must be able to explain to an 8-year-old kid in 2 minutes. Period. That's the version of simplicity. Anything else? No. Second, aligned. It must be aligned with what you want, with the geography of where it is being set up.
Lastly, it has to be exit efficient.
Exit efficient, right? Exit can happen under 3 circumstances, which is you sell your venture, there is a succession happening, and you shut it down. In all the 3 circumstances, it must be economical to deal with. Any structure which does not fulfill all the 3 on 3, you're setting yourself up for trouble. Again, let me go back to that 5-step framework. Now you are running a business. Now, the first vision is, do you want distributions? Do you want salary? That's the first decision you want to make.
What does that mean?
So distribution is dividends being distributed by the company, apart from a nominal salary. Most of the professional services firms depend on that. Or if you want to run it as a corporation, where I will only take salary, I won't take distributions. Because salaries are fully taxed at the maximum marginal rate. That is a challenge which a founder has. Now, if let's say you say, no, I want higher chunk of distributions, I'm still early days in my life, I'm creating personal wealth also. In which case, a company structure is not appropriate for you. You should set it up as an LLP, where you pay a flat rate tax of 30% tax, but you are not taxed in your personal. And you also have the flexibility of reinvesting the money back. It's only and there are no tax implications here. If it's in a private limited company, as you said, you will pay 25%, and then when the dividend goes, I get taxed at a full rate in my personal income, and I bring it back, it again comes in as capital. There's a host of compliance. Here, that's not the case. So that's the first level of flexibility and principle which you decide.
Which is to understand which type of company you should set up.
Constitution. You wouldn't want to use the word company, because company is a type of constitution. So proprietary concern, LLP. Of course, India, unlike the US, we don't have too many options here. It's just LLP so that gives you the choices of options, which a regular partnership firm or a limited liability partnership firm. In terms of when you get into the framework part of it, right? Would you want to have newer partners coming in? You want to keep it very simple, right? Because it's only going to be the existing setup. Are you open to higher compliance so that it limits your personal liability when a venture happens?
Yes.
Okay, so you want limitation of personal liability.
Limitation of personal liability is, by the way, guys, in simple terms, if the company gets sued, my personal assets should not get frozen with the company's assets.
Exactly.
Am I
Absolutely. Yes. So if this is the journey, then you only have one option.
LLP?
That's it.
I love the fact that you've limited my options. That makes it so much clear.
Right amount of tax is a function of three things: what you want to do, where you want to do, and what matters most to you. That intersection will give you the right amount of tax, and you must make peace with that number.
You must make peace with that number. Yes. That's, I think, the highlight of this podcast. You must make peace with that number.
I think that's alignment at its peak. Alignment is not the least outflow. It is the highest impact on yourself. And that need not necessarily be the lowest tax. It could be the highest opportunity also. I think that's a mindset shift which people have to come to terms with.
Divakar, why don't you start a company that just helps people comply with all the principles that you just mentioned right now?
See, I mean, thanks for the feedback, Ganesh. This is what we do in our advisory practice. But over time, you realize with the advent of technology, value enabling is losing sheen, and value creation is where the real alpha is. So in 2022, we started piloting a model where, using all these frameworks, we thought, why can't we solve larger problems for investors in real time? And that's how we built Brahma by DVS. And we chose the name Brahma because Brahma means creation. And we believe wealth is not something which you protect, it's something which you create. Because protection is driven by fear and it's a finite game. And creation is driven by abundance and it's an infinite game. So here, we don't just enable investing, we educate, engage, and fulfill that journey. And we've been incubating this for the last 3.5 years. And I'm glad to share we've done almost $1 billion of business in this phase of time. Looking forward to, having a much larger impact through this platform.
Perfect. Now, Divakar, I am very curious to know, how does Donald Trump pay zero taxes? Give me like a step-by-step guide on that, because I'm very curious.
Mr. Trump builds a hotel in New York City. He goes to the mayor and says, I'm going to build this hotel. It's going to create X number of jobs. It's going to create X billion dollars of economic activity. Give me property tax waiver. I am solving for your priority. You give me a reward for that. Period. See, every nation goes through 6 stages of evolution.
6 stages of evolution.
So a nation is born out of civil war. And then there is a period of consolidation where you have a strong leader, or there is a sort of strong system which gradually starts to come in. And there is order getting to restore. Then the phase 3 is about stronger institutions. You get judiciary, you get banking systems, you get laws in place. Phase 4 is period of prosperity, because you've got good institutions, there is peace in the nation. So it naturally helps you thrive as an economy. And when the period of prosperity grows for a long period of time, that's where the phase of inequality starts to come in. That's the next phase, phase 5, where the gap between haves and have-nots starts to widen. And when that becomes unmanageable, again you have a civil war. This is the 6 stages of any nation. This is a nation's evolutionary playbook, you can say. If you were to look at America as a nation, again linking it to tax, right? Every nation has its own belief system, its own religion, its own deity, and its own sacred ritual.
Religion, deity, and ritual. Okay.
So take America, for example. Its religion is capitalism. Its deity is the dollar. And reinvestment is a ritual.
Okay. Religion is capitalism. Deity is dollar. Ritual is reinvestment.
Yes.
So does that mean any entrepreneur who keeps on reinvesting will keep on being rewarded?
Yes. I can say it with reasonable certainty. You can peacefully pay 0 taxes and grow in the US. Anyone can pay, any entrepreneur can pay 0 taxes and grow in the US.
Provided you solve for priority, paranoia, and prohibition.
Yes. That's the framework, but provided you do a sacred ritual of that nation.
How would you apply this framework to India? What is our religion? Is it socialism or capitalism?
India is still a secular nation.
Okay.
Which means we embrace every religion or we embrace no religion entirely.
But isn't that bad?
That's a challenge, right? So that's a question for us to answer in context. It's not that India is a confused nation, but India is still a young nation who's evolving and she's gradually starting to find her identity. And this is the phase where policymakers need to be much more assertive in the direction in which they want to build the economy. And it would do well if we can identify our own religion, our own deity, and our own ritual. At this point in time, I can't give you a straight answer because we are still evolving.
Divakar, if you were to give out 3 concrete takeaways to a policymaker who's watching this episode that you wish the government rolled out for the benefit of the country.
So as a policymaker, give me 20 industries, which even if I were to, I don't need to put 100, 200, 500 crores. Even if I put 10 lakhs and start that business, I won't be taxed because I'm enabling something which matters to you. Put that on scale and make that your agenda for success. Propagate people who have claimed these incentives. That must be the headline. Headline is not what is the growth in tax collection. Headline must be what is the growth in incentives being claimed. Yes, there will be 5, 10, 20% of people who could try to game the system, but the remaining 80, 85, 90% of the system, of the people who claim the incentive have actually contributed. Rather than celebrating increase in collection, let's celebrate increase in claims. Because if these people succeed, everything else is taken care.
What's your second suggestion?
Make it easy for people to claim.
And what would be your third suggestion?
Give them immunity.
What do you mean by that?
I claim an incentive. There must be a simple self-assessment mechanism. I wouldn't want to have the fear of bureaucracy coming after me for endless number of years and having draconian penalties.
So people are scared that even after claiming the legal incentive, the government might come back and penalize them.
Because you are subject to regulatory scrutiny for an extended period of time, and the penalties, if even for a simple technical violation, could drag you to courts, and we know how the fear of judiciary and the bureaucracy is.
So they just refrain from getting the incentives.
That's all. So everyone, no one is a builder or enabler. Everyone is a thriver paying full tax. That's a problem.
Beautiful. I think, Divakar, this was amazing. So my final question to you is there a way to pay zero taxes in India?
Absolutely. 100%. Put your own true tax cost equation. You will figure out what is the actual tax you're paying. And you will be amazed to see if you're a consumer brands business in India, you will be paying zero to negative taxes in this country. Because your odds of success far exceed the tax you're paying in this country.
So moral of the story, pay the taxes, be happy because you're already at an unfair advantage.
Absolutely.
Thank you so much, Divakar. My perspective of looking at taxes has changed completely. And you must read that book, guys. It's amazing. I'll put it in the description. Now, before we say goodbye, I just want to quickly summarize this heavy conversation, and you can just correct me if there's any difference in understanding that I might have from what you just stated. So, Divakar, in this podcast, we learned that tax is levied for 3 reasons: resource mobilization, redistribution of income, and aligning public behavior. This is a method deployed by any country or all countries to ensure that all of us align together for the growth of the nation, which is envisioned by the government. So if we align ourselves with the government, we will by default become beneficiaries of the tax system. Then you gave me a beautiful example of your client who was trying to choose between India and Philippines, where he aligned with the priority of India, which is job creation, and paranoia of India at that time, which was Forex. By the way, guys, in 1991, India was just 2 weeks away from bankruptcy. And that is perhaps the most important reason why we opened up our economy. As a result, Infosys, Wipro, and all these companies became a beneficiary of that paranoia of having Forex. At the same time, they aligned with the priority of job creation, because of which they got a huge boost to become billion-dollar companies that they are today. So, you need to understand the 3 P's of alignment, which are priority, prohibition, and paranoia. If you align with priority and paranoia, you can become a beneficiary of the tax system. If you align with prohibition, then the government will protect you. Example, cigarettes. Then we spoke about this client of yours who was trying to choose between India and Philippines. And because they aligned with the priority and paranoia of India, they were bound to benefit. As a result, the tech companies in India, a lot of them got a 10-year tax holiday, their import duty was exempted, and they also got a 2 to 5% cashback from the government for doing business in India. An example of the same...
And for earning Forex.
and for earning forex. And a very simple example that you gave out was, if conventionally you are exempted of taxes on the 100 rupee of expense that you made, if you align with the government, there is a possibility that you might be exempted of 120 rupees.
Yes, 120 to 130.
Even though your expenses are just 100 rupees. Yes. So aligning with the priority and paranoia of the government is very, very important. So if you can do that, you will become a beneficiary. Then we spoke about how do we align ourselves with the government. That is where you spoke about two factors, what and where. You must decide what you want to do and where you want to do. If you decide on one, the other is something that you'll have to abide by. For example, if you decide to build in India, then you'll have to align with the government of India to build something. You can't choose both. You can't choose both what and where. You can either choose what or you can choose where. Similarly, if you decide to build a business in semiconductors or chip manufacturing, you can stay in India by default because your what aligns with the where. Then we spoke about Dubai versus India. People have this misconception that by default, if you move to a country like United Arab Emirates, you will be exempted of taxes, which is true, but they often forget that tax-free is not cost-free.
Exactly.
So if you have to make the right decision on where to move and when to move, you have to understand something called true tax cost, which is nothing but a function of tax paid plus pain endured minus the odds of success minus incentives. For example, between India and Dubai, on the outside it looks like India is charging you a 25-26% tax and Dubai is only charging you a 9% tax. But as an Indian who has his community in India, if you were to go to Dubai, there will be a certain pain that you and your family will endure. For example, your wife might lose touch of the community, you might lose touch with family, you might miss out on functions of the family, because of which your social circle will have to undergo a drastic transformation. If that is okay for you, perfect. If that is something that pains you a lot, you must take that into consideration before moving. Then we spoke about the odds of success, and this is where you mentioned that to be born in India at this time is a blessing because India is giving you access to a 140 crore people market, and that is something that cannot be defined by a price tag. So the government is charging you a 26% tax. Consider it to be a premium for the access to the market that you're getting by default. You could be sitting in Dubai, you could be sitting in the US, and you could run a business in India, but there's nothing like getting in touch with the customers, being on ground and understanding the market forces so that you can strategize better by being in India. So it's the premium that you're paying for the access of the market and proximity to the market, and don't think of it as a punishment for doing business in India.
It's just a price to pay for access.
Then we spoke about the world by design framework. Here's where you mentioned that you should not look at countries objectively in terms of their tax structures. You should look at the role that each country plays in the world economy. There are 4 types of countries: source, destination, conduit, and tax havens. Example of a source country would be America. Example of a destination country is India or Brazil. Example of a conduit country could be Singapore or Dubai, and tax haven would be Cayman Islands. Most people confuse conduit countries to be tax havens. That's not how it works. Conduit nations serve 2 purposes: mobility and flexibility. These are usually small countries, and because they are small, they have the liberty to frame laws very quickly, which are quite agile
And
for the
societies
world
are
economy.
homogeneous.
Societies are homogeneous because always they're able to draft rules very, very quickly so that they can align with the world economy. Example, Singapore and Dubai. So you have to understand the purpose of each country and see if that particular country serves your purpose or not. And to decide on that, you have to understand what exactly is the purpose of your life. And while you try to decide between more money, more peace, more opportunity, more mobility, you have to understand you can solve, and you must solve only and only for priority number 1. Then we spoke about how do we apply all these lessons to our life. And here's where you mentioned a very beautiful thing where you said you have to always prioritize clear over clever. Tax structures which are complicated, like the Irish Dutch sandwich, might look clever, but if they're not clear, those tax structures will play against you and not for you.
Oh yes, they're fragile.
Wealth should always be an asset and not a liability. As in, it should serve you and you should not become a servant to your own wealth. So instead of maintaining wealth, let wealth serve you. And if you want to do that, you have to prioritize clarity over cleverness.
Yes.
How do we achieve clarity? You can achieve clarity by following a 5-step process. Answer these 5 questions. What exactly is your vision? What exactly are your principles? What exactly are your choices? What exactly are your decision frameworks? And then you decide. Then we spoke about priority, and here's where you also mentioned, here's where I stated that I need peace and liquidity.
Exactly.
And on the basis of that priority, I got to choose 1 out of 3. And after making that choice, I must not look back.
Yes.
Because
and it was your decision.
Okay. And it was my decision, and I need to make peace with the number. If I stick to this framework, I will end up paying taxes, but it'll be worth it because I will have peace of mind, which was my number 1 priority. Now, how do we know that this is a bulletproof tax structure? So you gave me a 3-step framework to assess it. It must be simple, aligned, and exit efficient. What do we mean by simple? It must be simple enough for an 8-year-old kid to understand in 2 minutes. If it's any more complicated, you got to simplify it further, or it's the wrong choice. Secondly, it has to be aligned, which means it should align with what you want and what the government wants. And thirdly, perhaps most importantly, it has to be exit efficient, which means what? It must be super convenient while selling, while the succession happens, or while the venture shuts down. And then we spoke about how to apply this for a company. And here's where you mentioned, if you make 30 crores in revenue with 10 crores in profits, and your priority is salary or personal wealth creation, you're better off with LLP. Assuming you don't want external investors on board, you're good to go, because over here, you will also have limitation of personal liability. If this is clear, stick to LLP and forget everything about it.
Yes.
Then you gave me 3 advices for policymakers. Advice number 1, give me 20 industries where an average person can invest 10 lakh rupees and become a beneficiary of the tax structure, as well as help the nation progress, so that everybody can participate in India's growth story. Number 2, make it easy for people to avail these benefits. And lastly, give them immunity, as in, don't induce fear of being penalized later. Because right now, because of this fear, a lot of people refrain from claiming the benefits, even though they can, because they're afraid that the taxman will come and penalize them. And most importantly, celebrate the success. If we do that, we can progress much faster and with a much happier population. And that summarizes our conversation. Divakar, one last thing. Pam mentioned something about a school that you have to teach people how to live tax-free. Can you tell me more about it so that people can go ahead and check it out?
It's a Skool community. It's a software platform called Skool. It's called Tax-Free Living, where I put in all my frameworks, thought process, and how people can actually use this. The intent is to enable evolution at scale. So then the population starts looking at tax as a possibility and not as a cost. And the outcomes are magical, beyond conception. I hope let this conversation be the genius for that.
So if you want to learn to save taxes like Donald Trump, link in description, guys.
Done. Thank you.
Thank you so much, guys. Thank you
you
so much.